Welcome to Helping Chloe, part 4 of 6. I'm here with the beautiful, dashing Chloe. This is a 6-part mini series helping Chloe go from intermediate kind of level where she's at in her first 12 months of trading through to becoming a full-time funded trader and everything in between, all the ups and downs, the hurdles, the drawbacks on a journey such as Chloe's. Chloe, we picked up last week and the last 2 weeks, we were pretty chart heavy, covering looking at a lot of different charts and setups and things like that. I was thinking of shifting gears a little bit this session, this time around, to explore more kind of what I just mentioned off camera there around potentially limiting beliefs, things that have worked for you in the past or that are not working for you, things that you've discovered that weren't working, that you've tweaked and refined. So basically, tips and tricks just to review where you're at when it comes to your kind of growth, things that you've tried that have failed or things that you've tried that have worked well and so on. A lot of that you just mentioned before we kicked off the recording here was you often find these and discover these from backtesting. So I had that sneaking suspicion. Well, I don't know. I just didn't have evidence or data about the Chloe Andrews method, right? With entry on the 1 hour 50 EMA. That's what we kind of covered last week. Now, you've just mentioned that you've done some backtesting on that for the month of August. Curious to hear how those results went.
Okay. So what I found, first of all, like looking at the trades which I had taken, it wasn't a great month, but the ones which were winners would still have been winners even if I had the entry order higher up. But then looking at like the rest of August, there were 3 positions which met my like trading plan criteria, and I missed them, and I would have missed them with my EO right in front of the 1 hour 50 EMA rule. But if I'd changed my rule now, which is size up at the behind the S1 or R1, put it at the bodies, then put it to 1%, and then I've got rules like if it's below or above, I've got kind of set rules, and it's never now more than 10% below. That's the lowest I can put it below. So there was 3 that I would have got, and they were all obviously plus 1%, which is that was the thing that annoyed me so much. I was like, well, if like when I was going through it, all the ones which I did hit were losers. I was like, oh, the only ones I'm finding are actually adding. It'd be quite a unique situation for that to somehow result in a loss. It could happen, but yeah, so it would have been up 3%, and I think you worked out I should have been down 3% in August. So really that would have balanced me out.
Mm. Big discoveries, eh? And have you done many other backtesting projects like this one?
Um, so like on Trend Chaser, I've done a lot. On Pip Snatcher, I think I have like maybe 300, but it was more out the box.
Mm.
Which is kind of what this is. It is more out the box, but I'm tagging everything, whether it's in my trading plan, and then I've got a set system, and I've got a new system how to do this, which would be interesting to see what you've got. Um, I think it's a good idea, but you might think otherwise. So no, I've not got I've got other trades, but nothing else tagged in this way. So yeah, but I'm going to continue and do the whole 12 months and tag every trade that I would have missed if I stuck with my old rule, and tag every trade that I would have missed if I followed my rules, but just like either follow my rules, or if I just had a hard rule, put it on the daily pivot line and test
Mm.
that out as well. Um,
Excellent. This is really good. Okay, this is really good stuff. I can see the thought process that's going into this. And if anybody's just tuning in, just watching this as like a standalone episode, they'll be like, what the heck is she talking about? If you could please bring up your screen share so that we can also talk through that. This is what I consider, and I covered this on the weekend intensive. It's the difference between being a profitable trader and a professional trader. So particularly your backtesting data, if you've got that on, if you've logged it in Trading Vault, so that we can kind of just go through that process. This is how, if Luke's not around, refining strategies and strategies you're noticing are, you can be doing this at all stages of your trading journey. If you're at a place where you're trading, but you're not profitable, you can go back and do these kind of backtesting projects. Okay, what if I make this tweak or that refinement or I mean, typically, if you just follow the strategy out of the box, I've already done these tweaks and refinements. So you just do exactly that. And there's a method to the madness as to why I say do the strategy this way and don't do it that way. But let's say that that is not the most efficient way, or it's not the most optimal way. You can go and do these projects, and there's the system behind it, which Chloe's hopefully, as she just discussed, but we're going to kind of talk a little bit more how to streamline that process. You can do this in after trading a strategy profitably for 3 years. Let's say you're doing well, you're getting your 70, 80% return a year. You're doing very well, you're doing solid, but you're like, I see. Often this begins with a sneaking suspicion that I'm starting to see this sort of thing trip up a few of my trades. It all starts with a suspicion, right? We don't change our trading plan on a suspicion. We go and we explore further, right? And then you build on this hypothesis by gathering data, and you find all the samples where that sneaking suspicion had played out and played out unfavorably. And then you look at the profit factor ratio of that here in Trading Vault, and that will give you an idea of what the profit factor ratio, the profit factor ratio of that variant is, and if it's a variant that you do want to continue trading. And you can test this with a lot of things. I see Elka's down there scratching this down. She's like, oh, this is good. This is good. Maybe I'll create a strategy refinement playbook that like, here is the guide to refining a strategy. That is something that is on the Pro Trader roadmap, because the next step from that point is then complete strategy development, strategy design. And that's how I designed the Trend Chaser, is just doing this. You start with 5 kind of criteria, critical criteria, just make them up. Is where you're at, just using some advanced trading principles, and then you substitute and you tweak and you find you put, okay, just like a chef in the kitchen. Would it be better with more salt or less salt? Cayenne pepper? No cayenne pepper, keep playing around with that until eventually you get the taste that works. Is that kind of, oh, Chloe, explain to us how your process went and kind of the order sequence of events, and then the discoveries that you found. Amazing.
Yeah, exactly. It's exactly like I kind of had already been looking at them, but yeah, that's sort of exactly it. Like I was really good on Trend Chaser of having like multiple accounts, which you can Trend Chaser, like having like all the same rule, all the same trades, but then like different rules applied to see like the overall picture. So yeah, exactly. That's how it went. But
I see. So you put them in separate accounts, do you? Or that's normally what I'd use tags for. You tag them for different variants.
I only see if it's like that's if there's different like management or rules. So like say with I'm not sure exactly how I'm going to do it when I get to the end part, but say with this one, there'll be like trades which I'd only get if I use this new method, but then there'll be other trades which, if I use this new method, would have actually been losers. Do you know? Because if I use my old method, the PT would have been here, it would have hit it, I would have got +1. But with the new method, it would have been here, and then I would have lost them. So I feel like that stuff like that can get a bit difficult to do with tags. And when I'm at the end phase, it's not that hard to duplicate an account. It's actually, compared to the process of backtesting, it's quite quick.
Amazing.
So that's my thoughts on it. And then also what I am doing in this backtesting project is the ones which you don't like, where the 1 hour 50 EMA is far past that sort of 30% or out with that. If it like rejects it cleanly and then live entry, I'm also collecting data on all of them, because I have a suspicion that that is good from what I've seen, but we'll see when I get all the data.
For sure. That's the live entry. The maybe the thing that you'd be exploring there, I'm in full support of that, is how long did price remain below that? We don't want space where price runs down, hovers around the 1 hour 50, and then trading back up through that. So I call that
Yeah.
spring loaded. These little concepts that I come up with, it's because I don't, there are not rules for these words don't exist. So spring loaded is what we kind of call that. He's run all the way down. He's ran well beyond where our typical entry price would be on the entry order. And then it's showing momentum to the upside. But it needs to be really like a spring. It runs down and stalls there and flaps around. We don't want to enter on the way up there. A lot of this is really quite up here in the head in the head. So there's a lot of traders here that are probably quite new that don't know what the hell we're talking about. Would you be able to give us 2 different examples of what the traditional method is. So what exactly it is that you're testing here, like a visual. Explain how you were doing
Oh,
it
yeah.
before. So what is the what's the hypothesis or what's the exploration exactly that we are doing here visually?
Is this for the new one, which the one where it's away, or is this just the compare of what I was doing before to what I'm trading now?
Maybe show us both. So a
Okay,
sample of each. So it's like this is what I was before. This is what we're exploring now, just to test. Like what is the split test? Anybody who's has any kind of marketing background will understand. Like we're doing a split test here, as effectively all that back testing is, seeing what's
okay.
more of the optimal method. So
So this and this is a good screenshot because it has two examples. So
Mhm.
this was my old method, which was the rule was quite simply just put the entry order in front of the 1 hour 50 EMA, as long as the 1 hour 50 EMA was in a third
Mhm.
of between daily pivot line to S1. Now my rule is to size the position up, targeting the bodies of the previous swing, and with the stop loss where it should be just behind this. And if it's, a 1-to-1 position, then put it on the daily pivot line and just getting in early. And if price pulls back a little bit, but at least you've got into the trade. So then this is an example of a trade that I
So just to
would have missed
clarify
with
there,
my old
so
rules.
when you're position sizing this up, you put the profit target at the bodies of the recent high, stop loss behind R1, and then wherever the entry price lay, there you go, it is where it is, so that matches a 1-to-1. Is that right?
Yeah. I
Yeah.
think in this example, like you can see that's a bit higher. So I think in this one,
If you could zoom in just a little bit because it's quite a small setup, that'd be great.
is that enough?
It's better. Yeah. There we go. Yeah. Oh, that's me. Yep. Somewhere around there is good. Yeah.
Okay. So I think originally when this was targeted here, the
Mm.
entry order was about here.
Yeah.
Um, but so then my rule is if the entry order is in front of the daily pivot line and the 1 hour 50 EMA is behind, then just put it on the daily pivot line and just take the shorter.
Exactly. Yeah, then it's not necessary to be with the wiggling that around. Yeah, that variant of preferring not to trade beyond recent swing, recent high, recent low, because we could have a double bottom. That's the reasoning for putting the profit target at the recent bottom. Like that's as if it's a shallow little, like if that was a much higher low there, then that would be the way. But yeah, this is even more optimal. If you don't even need to trade to the recent low, if you can get in and out while getting a solid entry price, solid stop placement, targeting, not even anywhere near the recent low, you still had quite a bit of distance there. That's optimal. This here is for lack of a better word, a goddamn excellent setup. That is a fantastic setup right there. This is a textbook pip snatcher. This is one that literally could belong in a textbook. Like you've got everything there from the beautiful market trend there. Pullback. Alka's nodding away. She's like, "Yeah, I need some of those on my trading books, right? I need some of those ones." Pullback, decelerate, triggers the entry. Wham! Here we go, straight to profit target. Um, like that. That's a really good one there. And I mean, at the time, I see that the only things at 1 hour 50 MA, which is that solid green line, right? But that's why it looks like you took the entry a couple candles later. You just waited for
Mhm.
the 1 hour 50 just to like get within the zone, which right there, I always say on the line is in the zone, which is right where it is there. Then boom, away we go. You had the trend line, you had the pivot line, you had the deceleration candles, you had all of that. So I would say excellent, thumbs up to that one. If you took the entry 5 candles earlier, if you want to zoom back and just where we were, that probably would have been a little bit premature. If you want to zoom in just a bit again. Um, so those 5 candles to the left where it did cross the pivot line. So just explaining for anybody who's watching this, probably the reasoning, could have been two reasonings. One of them may have been that you saw a little bit of momentum, those candles approaching that line. Yeah, they maybe were a little bit too aggressive looking. So you wanted to wait for deceleration, but I'd say most likely it's because the green line, the 50 MA that you've got there, was probably about at that point in time is about 50% of the way up to R1, right? He's like just a bit too high. So you did the right choice there by waiting for it just to creep down a little bit more. Cool. So it's within that zone. So now it's both of them are the reinforcements there between the daily pivot line and that 50 MA, they're kind of now The 50 EMA's now got his back. He's now backing up the pivot line should it not hold. Versus if it was further afield, he's in a different war zone entirely. They're not fighting the same battle, right? So now you're good entry, bam, win within 2 hours or 3 hours. Really, 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 really good setup. So the difference here, what is it that we're testing again? I got a little sidetracked.
My old entry method of just put it in front of the 1 hour 50 EMA,
Right.
and my new entry method of having it closer to the daily pivot line or on the daily pivot line, even
Yeah.
if the 1 hour
Okay,
50
I
is
see. So
back.
are we prioritize? So this is I see the if we were to write this down as like a hypothesis kind of thing as a scientist, it's is it better to prioritize entry placement on pivot line, or is it better to prioritize entry placement on 50 EMA? It's
Yeah.
kind of what is if my understanding is that's what we're talking about, yeah. Yeah, and I would say prioritize it on the pivot line. That's that's the pip snatcher strategy. The pip snatcher strategy is heavily pivot line based, right? There's lots of EMA based strategies, but what makes this one special is the pivot line. Then we go into the IBOs and CBOs, which that is a different. It's no longer the pivot line at all. We don't even use those. We use the fib retracements, but the 50 EMA remains constant across all strategies. But for this strategy, it's pivot line based. So we need to work with the strategy's native critical criteria, I suppose, which is the pivot line. Good stuff. Good, good, good. Sorry, you carry on if you want to explain that or show us another
No,
example. Was there anything else?
yeah, I think that's it. I think this was one of the ones I missed in August.
Right.
Yeah.
So the risk that we run, if you want to give us, if you have an example for one that we prioritize entering on the 1 hour 50 EMA rather
Mhm.
than on the daily pivot line, and we see it worked out unfavorably. It can sometimes work out favorably, but we'll try to find an unfavorable one just so that we can show what happens more often than not. Um, those are both pretty good setups. Yeah.
Hey, Al, I'm having a meeting. Oi, Al, I'm having a meeting.
Thanks, Ra. Ra's contribution. Good stuff, mate. Mhm. Um,
Probably maybe this one. There was quite a few from
let's
August.
see what we got. So more often than not,
This one.
yeah. Okay, good. So more often than not, if you want to zoom right into that one, that'd be great. Uh, the 50 EMA, not always, but more often than not, the 50 EMA is behind the daily pivot line, right? We can see prices pulling back. 50 EMA is behind the pivot line rather than ahead of the pivot line. Have you noticed that, Chloe?
Yeah, yeah, definitely.
Okay,
I've got
so
a tag for if it's in front, but it doesn't happen often.
it's not that often, and most of the time it's a non-issue. It's fine as well, and that's because the 50 EMA is a lagging indicator, right? Follows behind price, and typically pivot lines present ahead of that 50 EMA. So when we're entering on the pivot line, and if we're prioritizing entry placement on pivot line, that means that we almost never get 1 hour 50 like headwind. We're almost never trading through the 1 hour 50. We don't want to be trading through either of them. The pip snatcher, the joy of the pip snatcher is that it is it's a there's a nothing in the way. It's the true pure path of least resistance strategy. Price more often than not will travel the path of least resistance, right? So the theory behind the strategy is we want to chunk as much junk between our entry price and stop loss as possible. Because again, path of least resistance, if we're and resistance can be everything from EMAs to pivot lines to I mean, there's a few other things such as like, downtrend. More often than not, a downtrend continues on. So we want to give all as many reasons as we possibly can for price to want to go to our profit target, because there should be nothing in the way of our profit target, and a whole bunch of junk behind those a lot of lines that needs to break to get to our stop loss. Then rinse and repeat, and the profitable edge will play out. So it really is a simple strategy. Not saying it's easy. And some of you have been here 6 months, 9 months, still trying to master the strategy, but it is simple. That's really just what what this is. So when entering on the pivot line, almost always, not always, because there's always exceptions to the rule. Entering on the pivot line, which is the blue line, you almost have nothing in the way. Right? Almost always have nothing in the way. Um, no recent low, no double bottoms, we're good. However, if we're entering on that 1 hour 50, we can see in this case here where your entry triggered, even though it was very minor, very minuscule, this one did end up going on to be a, it doesn't matter. Yes, it spiked you out as news, but I'd say this should have resulted in being a winning position. We can see it didn't glide quite as nicely to profit target as that last position that you reviewed, right? Where it came up, it hit the 1 hour 50, but because that 1 hour 50 was quite above the pivot line, you ended up there, it ran down. We had that red candle form, which kind of formed a little low test on the pivot line, which created some headwind. We want as little headwind as possible. And then it popped up. It actually, if you went on to say like the 5 minute time frame, that would look like a break and retest of that pivot line. Run up 50 MA, now bouncing off the pivot line. Now it's kind of like one of these pinball machine sort of analogies. We could have something like that in there. And eventually it did break to the downside. But we want to prevent that from happening as much as possible. And because the pivot line is typically first, like we don't need a 1 hour 50 EMA rejection for anybody who's unsure about we need the 1 hour 50 EMA protection, and we want it to be as close to that as possible, to the pivot line as possible. So we get that simultaneous rejection of both. Those are the most optimal setups. Good stuff. And the only reason why we would want to be trimming, so there are some cases that we would perhaps wiggle our entry price to be a little bit above the pivot line, say on a setup like this. But that's only when we don't have the luxury of profit target. Like if our profit target was exceeding recent low, yeah, down there. If like your profit target happened to fall right where the point of the of your line that you drew there was, so just to the left, see of the blue line, go down a little bit to the point of it. There you go. If that was kind of where the profit target was going to, that's just where it ended up, because R1 was like very high. That means wide stop loss means wide profit target. Then that wouldn't have been. Then you could have thought, okay, well, let's shimmy up our entry price a little bit so that we don't have the negative of trading beyond recent low. But you can see on this position here, you had a luxury of plenty of space there to be trading miles. So there wasn't really a reason to, the only thing that you created here was by going at the 1 hour 50 MA was that you've got that headwind trading through the pivot line. It's a negative there. Now, there's always a trade-off. What are we trading this negative for? Are we getting a benefit? Well, not really. We're actually also getting another potential negative, which is price may just run up, just give the pivot line a little tickle and fall away, and then run straight to profit target. And those are the winners that you're going to be missing. And that was, I think, what we covered last week, wasn't it? Is that by taking an entry much higher up at the 50 MA after the pivot line has actually already fallen, that's a one line of protection that we've already lost. We're entering after that, then the position's weaker because it's closer to your stop loss. All it needs to break now is the 50 EMA, and now we're on our way to our stop loss, which is a bad thing. But every losing position, obviously, that eventually hits our stop loss, you will be capturing every single one of them. But not every winning position pulls back to the 50 EMA. Some of them just hit the pivot line or run straight to profit target. So you're minimizing the amount of winners that you catch while maximizing all the losses that you take. And that's the opposite of what we want. These things are not always so obvious when you just look at them from the surface. And this is why this backtesting project is really wise. Yeah. Was there any other discoveries that you made while doing this?
No, not yet. So I've got my method is let me just come here. The one I've done. So my method is to map it all out on the charts first, because I found when I was this is an example. So what I found was when I was doing it, there were so many parts. It was like, play it, find the trade, analyze if I would have taken it, like draw it on, then take the screenshots and add the data into Trading Vault, add the tags. Like for each one trade, it was like this really long process. And then I found it was like stopping me being able to like analyze things, because I felt like I'd get into that like focused, analytical, think about it mindset, and I'd have like, oh, screenshot, tag, and it just felt like a really like bitty process. So what I've been doing, and it's been working well for me, is like splitting it. So there's one part which is like really focused work, which I just go on the charts. I draw the positions, and then I have all the tags. Like I have a structure of my tags in Trading Vault, and then I just delete all the ones that are irrelevant, and then I have it here. So this is like all the tags that I will add. But then it's like I can just stay in that like focused mindset of like just being in the chart, just looking at this, and then in a separate time I can do the bit which doesn't actually require any brain work. It's just screenshot, that tag, that tag. So that's my system at the moment.
Hmm.
So not a lot. So I'm in this part, but I've not put a lot of it into Trading Vault yet.
I see.
So,
Okay, no, good stuff. Good. That system works. Absolutely. Finding a system that works for you is 80% of the job, that you find your flow. So for me, when finding my flow, is I go in when I go through, I collect screenshot, date and time, setup, screenshot, date and time. I'm not analyzing the positions at all. Different type of back testing, which is what you've and what you do. Not It's not completely different, but as you said, not every when I'm back testing, I'm looking for a variant. So I'm looking for the out of the box method. So I take the one that meets all basic criteria, vacuum them all up, wide net, cast all that, and then I go through and mark the ones of, okay, was this one trading through the 4-hour 50 EMA or not? Yes or no, yes or no, yes or no, yes or no, yes or no. And I'm just analyzing all the data. So I'm collecting all the data in the beginning, all in Trading Vault, and then I'm going through looking at the screenshots in Trading Vault. And then I decide when we're doing the like all the tags that you're already putting tags for each one. Like I'm not really discriminating. Well, I'm just like, is that a pip snatcher? Yes, it is. Boom, go through. And every so often I might find that when I'm aggregating the data in Trading Vault, I'll be like, oh, what was I thinking here? Why did I add this screenshot in here? I'll just delete. That's not a valid trade. Maybe 1 in 50 or something like that. But I've gotten pretty good at it at this stage. So I just find doing that for exactly what you said, that kind of workflow of looking at charts and seeing, is there one here or not? That's kind of the only thing that I'm looking at. Is there one here or not? Not looking for the tags, not looking for the variants. I do the variants in the data aggregation later. And if you can collect as much in the screenshot as possible, you might actually find, or I've found, that if I've got 300 just normal, regular pip snatches out of the box without any considerations of lower high, higher low, any of those kind of things, um, you get 300 of them. You're tagging it for one specific variable that you're thinking, okay, am I trading against the trend? Like is a lower high formed and now I'm taking a long position on it, something like that, just whatever it is. You can go through and tag all that. Then you have the discovery at the end of it. And then in a couple of months, you're realizing, there's this thing here that I didn't consider that keeps presenting. This keeps being this thing that's tripping me up. You get that suspicion. And then you go and say, oh, did I kind of accidentally or coincidentally include this data or whatever it is in my other 300 trades that I gathered? And if you did, well, then easy. All you do is review those 300, place a new set of tags of discoveries of your suspicions, and then you'll be able to just separate for this variant, that variant, and you'll see, oh, this is actually way better if I do it this way around. So this is why I'm a big, I encourage collecting like as much data within reason. You want the data obviously still to be visible. You don't want to just put everything on with all the indicators and this and that and all the other things. So keep it clean and lean and green, but you want to be capturing enough of that data to go and be able to go and reuse it for other tags in the past. It's time that it takes. Like the most time consuming part, it's not even the tagging, it's the finding, screenshotting, and adding to the journal. Trust me, having a 300 or 1,000 samples of trade data, that you can review and apply tags and twist in different ways and experiment and play around with that as like a little science experiment of, oh, had I done this? Like they're all the same trades, but it's had I done this or had I done that? Had I done this? Like this is really good for trade management as well. If you're trading IBOs, CBOs, if you're collecting backtested data on that, make sure you're one of the interesting experiments is to go and, well, firstly, make sure that you're capturing all three time frames, like the 5 minute 50 MA as well, even if you only take that as an entry methodology, because then you can be like, okay, had I trailed behind 5 minute swings or had I trailed behind the 1 hour 50 MA? And you can have a look at that. And you won't have the ability to change your position sizer, but you can kind of eyeball it to see what the net profit would have been if on those 300 trades, had I trailed behind just the swings or just behind the 50 MA or trailed behind here and here and here. And this is what we're doing to identify, again, what works best majority of the time. And then we do that every time, right? Sometimes trailing behind the 50 MA is going to be better. Sometimes trailing behind the 5 minute swings is going to be better. Sometimes XYZ is going to be better. But we don't care what the sometimes is what we let fall to the wayside. What we really want is what works best majority of the time. Out of those 300 trades, 5 minute swings is better. Good. Now we do that every single time. Anyway, I went down a little rabbit hole there. So your process then, or how have you been like finding the trades that you've been collecting data on?
So like playing it like this.
Mhm.
Like I've done it the classic way of this, play it if entry presents, pause it, drop the position.
Hmm.
Maybe I'll initially decide if I tag it trading plan, not trading plan. And then I'll play it out. Then I'll go through my tags, add that in, and then move on.
So then you just press play. The bar replay, the new function that they've got where it cuts all the data now on all the time frames. That's really, really, really good.
Yeah.
So
Yeah.
you just
Yeah.
go play. If you were to go back, like let's delete the last like 30 or 40 candles and let's go through kind of the system that you'd be going through to get to the position that we're currently at now. Just so we can kind of showcase that. Just see if there's any improvements or refinements that we could make with that. I see you got your charts kind of all in different places here. You got four
I know,
charts.
I'm used to it because oh, sorry. I read it like this. I'm like, 1 hour is important, 1 day is important. But then I feel like the replay sometimes it gets a bit glitchy if you play it in a specific chart. Whereas, so I focus on, I'm always reading these two. And then when it comes to screenshot and live entry or my tags, then I might take out the 4 hour and be like, oh, look
Do
at
you
that.
ever use like alt click or option click?
I do, I
Yeah.
do. But now I've got a monitor. I'm preferring this method
Mhm.
just because
Yeah,
I
man,
think
whatever
just
works.
because of the replay, at least for this part.
Yeah.
But so here I'd go play.
Yeah. So you're keeping your eyes probably on the pivot lines, I'd see.
Yeah, yeah, exactly. So I'm always looking. I know it's I don't know if it does this for everyone else, but it does this for me, where it's like the pivot lines go a bit funny, but then it's always showing you whatever the pivot lines for the day that it's in. It just looks like they go funny. So I'm always looking at price, like, if it hits this, then it's invalid. If it comes back and hits this, then it will pause it straight away. So
Yeah.
I'd maybe like get to like here and then be like,
Yeah, and then cut a little bit back and then it resets. Yeah. There's a few
all
of
right,
those little bugs, but yeah, just when identifying the setup, it's all that's the point where it becomes clean. Yeah, good.
Mhm.
Okay, so from here then.
Then I'd be like, okay, so I'm on this one. So this is the daily.
Mhm.
I'm like, straight away, this is not my trading plan. But like, do I want to collect data on it? Yeah. So
So here's even another one that when I keep it so with that wide net that I cast when collecting data, I'm gathering everything. I like to only be analyzing one time frame. So, where use this if you so choose, is determining DDP is something that can change, right? So like right now, my set of DDPs, like calls that I make on a DDP up or down are just going to be different than what I would have done a year ago, which is why it's always wise to be updating and always doing your DDP back testing, just to see kind of where you're currently sitting at, right? Because you know we're a different person a month from now as we are a year from now, and so on. And that's just one of those variables. There is no real hard rules around DDP. It is a discretionary kind of confluence factor. So I collect all pip snatches. So I actually am doing this on the 1 hour, only 1 hour time frame, in that maximize full screen kind of thing, so that the DDP is not influencing my decisions until I find the pivot the setup, and then I put it in a view like this, and then I capture that screenshot, and then I put that in the thing, and then later I'll go through and aggregate all the data and be like DDP yes or no, yes or no, yes, no, yes, no, and then you can take that further. So all the ones that have a DDP of in favor, because obviously we don't trade it if it's non-favorable, or you might even have favorable, unfavorable, and unclear DDP, kind of soft. And that's quite cool as well, because then you can aggregate the data and be like, okay, the ones with the DDP is like, it's not against, but it's not favorable. This is how we came up with that variant for the trend chaser. Whereas it's like trading counter trend on the 1 hour on the trend chaser is bad. It's a negative variant. Like, we're going to lose money if we do that. But trading on the 10-minute time, so it's a 10-minute time frame, right? The trend chaser. If we're trading and the 1 hour is choppy or weird, or it's doing strange things, that's actually still a profitable variant. It's not as profitable as if we're trading with the trend. So I'm happy actually taking that one. I'm happy to go with that. And you could apply the similar kind of question to your pip snatches, is like, okay, if the daily's unclear, is it still profitable or is it unprofitable? And from the exploration I've done, it is still unprofitable because it's only a 1-to-1, whereas we've got the luxury of the trend chaser being a 1 2/3 profit target. So the strike rate can still be slightly negative and you're still profitable. But it's still interesting stuff to have there. It's just one of those little things. Anyway, that's just my system and how I do it. So you might find that on the fly, because you mentioned, when you're focusing on the 1 hour 50 MA and the pivot line on the actual strategy here, to then go and say, is the DDP favorable? Is it not? Like, just adding that layer of complexity can take the whole process of data collection to like more exhausting. And the more exhausting it is, the more resistance you get, and the less likely you are to do it. Yeah, go ahead.
I've definitely found this is the right way for me, because the reason why I have like 300 untagged trades is because it just didn't work with my brain. It'd be like, okay, sit and look at this screenshot and just look at DDP. Like, I just couldn't make it through because it felt so like limiting, and it just wasn't, I don't know, I just had such a mental block doing it like that. I feel like something works for your brain, something doesn't. My brain could not do that. And then even doing this and taking the screenshots as I went, it felt like I was like trying to make myself do something I really, really, really didn't want to do. And it was so slow and difficult to motivate me to do it. And I just hard to actually sit and focus and do it. Whereas
that's the difference between men and women, right? Like, women, they multitask. You can look at 3 charts at once, where I'm like, I love just like looking at this one thing. Tunnel vision, I'm a tunnel vision master. Anybody who sends me text messages when I'm in the middle of video editing, yeah, I'm not seeing it. Like, I'm just blinkers on, here we go, just focusing on the one thing. I like that approach. Women may be different, right? So yeah,
I'm using this as well as like, I'm doing this exactly how I actually approach the charts live. Like, I look at it the same way. So there's so many opportunities each day, but it means, as well as the opportunities that I look at each morning, I'm like going through that exact process for an entire year and doing it as I would do it, and like analyzing it each trade fully. So I feel like it's like building like a bit of, I don't know what the word is, like building a muscle of being able to like do that, fully analyze each position and be like, is this my trading plan or is this not my trading plan? All right, go on to the next one. And then so yeah, it's working for me so far.
For sure. What you just touched on there is something that I'd like to expand upon a bit further, is that there are 2 different reasons for backtesting. There's backtesting the strategy's performance, and there's backtesting your performance. And the backtesting, like, is what I kind of call the strategy refinement, is you're going in non-discriminatory, and the kind of the process that I've gone through, and because I've built strategies from scratch, is that by doing it chunk by chunk. Okay, we're just analyzing this, yes or no, yes or no, yes or no, yes or no. And the next one, did they have yes or no, yes or no? And then doing those tagging. And it is quite mechanical and it's quite an arduous process, which is very different. It's a different way of how I wouldn't, you don't have the luxury of being able to do that when trading live. I wouldn't even say it's a luxury. It's just rather than if you're not compartmentalizing things like that when trading live, you're looking at everything at once and then looking at, okay, 1 hour 50, 1 hour time frame, daily, pivot, all those different things, the same way that you were doing it. So there's kind of two gears. Are we going in really testing the performance of the strategy with the intent of split testing it against a different variable? Is that's your data collection, and the other one is, okay, I'm going to be trading this live as though I would take it, wouldn't take it, would take it, wouldn't take it. And the difference there is, if you're back testing your performance on the charts, doing it exactly how you're doing is the best way to do it. It's absolutely the crowning way to do it, candle by candle. Would I take it, would I not? And you're making that decision call on every single trade. Would I take this, would I not? Does this meet my trading plan, does it not? But that's different than, is this a valid setup or is this not? Because now we're factoring in confluence factors, right? We're factoring in, okay, there's a resistance level there, there's not. And so that we're going to have different data on the same 12-month period. Let's say that you came back 2 years from now and you went and tested your performance again on the exact same trading period. The net outcome of that 12 months of data would be different because you're probably a better trader. You're probably factoring in different things from there now. And that's a good thing. That shows that there's a performance improvement, but that's also different than the actual getting really granular on what exactly is the strategy and what is, because if you apply the exact same variables and you backtested that 12-month period in 3 years from now, then it would be the exact same. You'd get the exact same data. But if you're trading it for your own performance, you're going to get different performance.
All that are
go ahead.
All that are not my trading plan, I'm still collecting all of them. So like if it's out of the box, then it's like this. Like this one is not my trading plan. Not my trading plan, you see it there. But I'm still doing it. So it's like everything is out of the box. Then I have went through that process. So I have those tags so I can say for, I don't know, it'd be interesting to see every year what I consider right now my trading plan or not my trading plan. Is it or is it not? But I'm still collecting it. So it should be, in theory, that if I do this in a year's time, I'd still have the same sample. It's just maybe a different analysis on, DDP, whether it's my trading plan or not. But hopefully there'll be bits that I find within this that can help me get to a better trading plan.
Amazing. So you're kind of doing it both at the same time. Really good stuff.
Yeah, exactly.
Cool. Alka down there asked, how many tags do you have, Luke? I've got different tags on different accounts. So on the backtesting accounts, like specifically, it's one tag that I'm looking for at a time. When I'm going through and doing a backtesting project, like for example, like for the trend chaser, I've got a whole account dedicated to just the trend chaser, obviously just trend chaser backtested data. And then that is just for 1 hour market condition. And so on the tags in there, it's with trend, counter trend, unclear. And I'll have that whole thing. So I'm quite deep when it goes to that. I don't have that many tags. And that whole project, and I'll spend 2 months and dozens of hours, maybe even up 100 hours, let's say, of all the backtested data that I've got for the trend chaser, because I built that from absolutely scratch before it was even called the trend chaser. There's all sorts of different, basically, a writer who's quite, or an inventor, let's say, he's probably got scratches and scribbles and drawings and stacks of random pieces of paper and ideas. And it's quite messy in the beginning because you don't know what, and you might only collect 50 trades and you realize this is a dumb variant. Let's scrap that completely, screw it up, throw it in the bin, start again. So like, it's not a pretty linear process. You keep just kind of trialing and error until you start getting, okay, now we're trading this and it's actually at break even. We're applying these concepts and we've collected 100 or 150 trades, 200 trades. Now we're at break even. This is good. Now we're starting to see it's not ready yet. It's not a finished product. You don't want a break even strategy. So that means if we layer something else on, we don't want it too complicated. So we don't want to have 10 variables. Or is there something that's not really making that much of a difference? That's a critical criteria that we could remove and substitute for something else. or if we refine the entry or put the stop loss up behind the recent high, which is eventually what we got to. And the profit target. What if we just had a fib extension based profit target, but we don't want that too complicated. So I'm going to make it a negative fib retracement line that just exceeds. So it's nice and easy so we can keep it really clean and linear. Like these are all the things. And then eventually it gets to like, oh, we're seeing profit. Great. This set of criteria equals profitable strategy. From there, it's not finished yet. We need to refine and polish. And then that's when I'm like, okay, I've got the strategy exists, and that's kind of what we've got as the out of the box variant. And out of the box, for anybody who's not sure, that just means like what I pretty much just explained there. It's like we've got a set of critical criteria. If you do these exactly, you'll do great. But if you're a little bit more advanced and you want to start incorporating another time frame, that gets a little bit more difficult. So we want to give you the easy, let's just call the out of the box as the easy method. And then with the more advanced, we're exploring a little bit further. If you've got the skill set, mental capacity to do that, now we can layer that one on top as well. And say, now we've got like the ABC variant, which is pretty much dependent on that 1 hour time frame. So at that point, Alka, I went and I just gathered or went through a lot of all the different screenshots as I just, as I was just chatting with Chloe. I have all that data. Now I'm just going to look particularly at that 1 hour trend. And what exactly am I looking for here? We've got the 4 handles, right? We've got a high, let's say it's a down setup positions. We've got a high, low, lower high, and lower low. Those 4 prior to the entry presenting, that is confirmed with trend. Doesn't matter whatever the heck else is going on over here. I'm not looking at MACD. I'm not looking at RSI. I'm not looking at anything. It's just those 4 handles, high, low, lower high, lower low. Good, with trend. Now, if it's high, low, higher high, then breaks the and lower low, unclear trend. Right? Now, if it's high, low, higher high, and higher low, now that's an uptrend, taking a short position, counter trend. That's it. And then I'm going through and doing that over 300 samples of data. And then, with trend, counter trend, and unclear. And then at the end of that, Trading Vault does its magic, and it tells you just by aggregating through those, strike rate, profit factor ratio, reward risk was stable with that strategy. But yeah, so I'd really say, and I've seen it quite common. So Alka, I'm going to make an assumption here because it's backed by data. I've seen a lot of novice traders doing this, is they go through and they get carried away, get swept up with all the different tags. Like you can create a whole custom set of 100 different tags, and that's not that's an incredibly arduous task to go and have so many tags. Most people are putting too many tags. All you're doing is just test for one thing at a time. And if you want to come back, find this split test there. Like split testing a landing page, if you're in marketing, you don't go and create a whole new landing page and change the colors and the branding, the logo, and then maybe it works, maybe it doesn't, but you don't actually know, you can't isolate what is the thing that you change that works. You only want to be testing one thing at a time to really say, I know exactly, specifically what the difference in performance is if I'm trading it counter trend, with trend, or unclear trend. We've got a question here. Good. Okay, great. Thanks for asking that question, Alka. We've got another one here. I understand the idea of backtesting manually to measure your ability to execute on a strategy, but when it comes to creating and testing the viability of a strategy, do you use automated backtesting or still manual? If so, why? Because obviously with manual backtesting, you'll never be able to collect as many data points as with automated, asks Niels. I don't have that much experience with automation and such. Maybe there's a helpful tool out there. It's just, this is the way I've always done it. I've been trading since before, these things really came out. Maybe Niels, maybe you've got some something that's helpful or useful. But I'm a bit traditional when it says, what I've done thus far has got me to where I am, and I'm very comfortable and happy where I am. So I'm very opposed to changing the recipe that I've got, even if there is a more optimized method. I know about these. There are these programs that go through and check all the different variants and variables and things like that. That's exactly what Craig says. Yeah. And also, one other little note, and I don't mean to completely derail today's subject point. if there are AI systems that are coming out and refining and looking at every single, let's say there's super AI comes out, they click a button, they're like, this is going to go and back test and refine and tweak and test and check every single variable and be like, if we do exactly this, we're going to have the best trading strategy in the world. The way I see that happening, and this is again, maybe that's going to happen, I'm sure sooner or later, 10 year or who knows. But the way I see what is going to happen then, it's going to be optimizing for the absolute optimal best way to trade based on historical data, right? You're going to have one of these systems. He goes and does that, finds that little market exploitation, which is basically what trading is. We're exploiting the market. And that's the best. And it runs the best in the world. And then there's another AI and another guy who turns on his machine and he goes and finds, oh, here's actually a better way. And that ends up compromising the first trading bot's optimized, amazing strategy. And then the next one, he's going to come and he's going to tweak and refine that. And the other one, there's going to be kind of a little war that happens. And they're all going to be fighting over the top spot. And each time there's a new one that's introduced, it's going to change the way that the previous one was trading. That one now becomes unprofitable. So I think there's going to be this kind of churn of world's best or most profitable trading strategies. This is what my theory is. And they're all going to be competing on the absolute best, absolute craziest refined strategies out there. And if one can find it, well, they can all find it, right? But the human element of Luke's strategy, I can almost promise you all right now, pro trader strategies are not the best strategies out there. That would be very dumb luck. Just if I stumbled upon the trend chaser and it happens to be out of all the strategies that exist that are profitable, that happens to be the best, most profitable one out there. I would say probably not. We're probably not even in the top 10 most profitable, best trading strategies out there. Maybe, maybe not. The great thing about these ones is they are simple, and they are profitable enough that you can quit your job and trade for a living from them, right? But because we're a little guy, and these are just strategies that Luke cooked up in his mom's house. I literally did. I did this when I was in New Zealand in 2022. I was there for Christmas anyway, and I spent some late nights. Uh, so that's kind of a funny addition. These strategies here, we're probably on an AI optimized level. If one of these great trading AI, scraping strategy defining softwares do exist, which, we're probably not too far off that. On that playing field or on that stage, we are so irrelevant. We're so probably on paper unprofitable or not a great strategy. I mean, granted, this is a world-class strategy. It's more than enough to pass prop firms and as we've got traders in the community doing. That I think the way that this AI war that's going to be trying to claim top spot, because why would you get an AI strategy? Why would you, if you've got the capacity to click a button to find the best strategy, why would you click the button and be like, find me the 50th best strategy that exists? You wouldn't do that, and they probably wouldn't even know how to do that. That when you've got a very good, better than average strategy, and these ones are all tweaking and competing against each other in strategies that end up contradicting each other and breaking the system, I think we're safe with where we are. That's my theory. And I know it's kind of a hard concept to explain. I don't know if I lost anybody along that journey. Chloe, I mean, you're the star of the show here. Is what I'm kind of picking up? What are you picking up? Kind of what I'm putting down when it comes to?
Yeah, I followed it along. I followed it along. I found it reassuring.
Okay, great.
I see what you mean. Like, we're not in the sort of playing fields of where this will go because we're here, but we incorporate things that they wouldn't. Yeah, I get it. I found it reassuring. It made
Good.
sense.
Neil says that's such a good point, Luke. Yeah, makes sense. Yeah, good. I actually sent an email out about this like maybe a year ago, and I was like, if you as soon as you start competing in that playing field, like, well, you're gonna lose, I would say. And sometimes not being the best. Pro trader's never going to have the crown jeweled best strategies ever. What we have is hopefully the best community ever that support one another, and just a little and a dedication to put some elbow grease into manually logging our trades and doing that stuff. Which I believe just from an energetic standpoint, if we start getting a bit metaphysical, I think that's really what is AI can't come and take that human element stuff. Our imperfections. Because I bet you plug this into a supercomputer and they'll say, "Oh, you are definitely not trading this strategy perfectly." But our imperfections are what make us safe, and that's what makes it perfect is the imperfections. And I think that's just such a metaphor for humanity as a whole as well, It's like, when somebody's giving you an AI response, they've plugged it into ChatGPT and they reply, and the perfection is too perfect. And I sometimes use it in like emails and things. And guys, here's a little tip, little giveaway. If somebody sent you an AI response, it has this hyphen. It uses this hyphen between words, not just like the regular one. It's like the long one when it's like where I would typically put a comma there. I have never used that character ever once, ever in my writing or in my typing. Like, I just don't do it. But apparently, if ChatGPT is doing it, it's probably the perfect way. It's probably perfect English. It's perfect typing. I'm like, nobody uses that. It's gone to the point of it's too perfect. Even when you tell it to be like informal and use slang and things like that, it uses slang perfectly. You can tell it's a little bit gross. The fact that there's no typos in there, it's like it's just not real at that point. And kind of similar thing with the trading. I think our imperfections are what keep us going and surviving. Neil's saying also loads of AI bots exploiting certain market inefficiencies by definition creates new ones too. So as long as you're willing to adjust over time, you should be good. Yeah. So that's it. And there's more and more AI bots, and they're just going to keep going for those exploiting the inefficiencies, but they're going to be exploiting the most inefficient, the most inefficient inefficiencies. It's going to be targeting those ones first. They're going to be looking for the optimal way to maximize the profits as much as they possibly can. And because we're just a little small fish, they're not really going to like come after us. It's like the tax man. He's only going to come after the big billionaires, the people who are like, okay, well, let's actually let's bring them down. We're kind of in the middle where it's like, no, it's not worth the AI bots coming and like running our stop losses because we're just little guys, like running up to the 50 EMAs or to find a combative strategy that counters ours so that they could be coming for our community. It's just not. We're a long way away from that. It's not really going to happen. And likewise, if something does happen, they come out and they start doing that, and the strategy stops working. Well, then we can roll up our sleeves, put some elbow grease in, and go and just find the variants to be able to tweak it, refine, and adjust. And it'll be very obvious. One thing with the AI is it'll be very goddamn obvious if what it does, because it'll follow a strict set of recipe, and it'll do it precisely perfectly every single time. And then we'll be like, oh, well, when we backtest that and gather data on it, we'll be like, oh, well, this is a real easy variant. We'll just be like, do that, and it doesn't work because whatever, we get exploited. Whereas with humans, our imperfection is what makes it a bit more difficult. We got to look for the kind of the trends because not everybody's trading perfectly. If everybody was trading perfectly, you can again exploit that a lot easier because it's obvious at that point. Anyway, I went way down a rabbit hole. Good stuff. Chloe, where were we at? You're going to have to put me or us back on track. Well, where are you at actually when it comes to
talk about trading plan at that point?
Oh, yes. Trading plan. What have you then doing this? I mean, you've kind of already touched on a little bit. There's trades because if we've got to date, it's the 9th of October. I assume that you've already adopted because you've gathered a decent chunk of data. You have now made a tweak in your trading plan, have you, since last week?
Yeah.
Cool. So we're going to come back and we're going to be reviewing trades from all of October. We'll probably do that next week. And we'll have a look and see what the difference in I want to see evidence that the trading plan changed. That's a big deal, guys. Anybody who when you change your trading plan, these tweaks should be few and far between, and they should be data driven, which Chloe's yours has been. And you'll see the evidence of that. And like the way that you trade now, it's like well, the way that you were trading before, it's like you've almost shed a new skin. It's like it's a new trading plan, new you. Yeah. So what was the tweak specifically? If you were to say write them down, make dot points.
I'll get it open. I've taken no trades so far in October.
Why is that?
I've looked every day. I think that's just where we are. So this is my trading plan. And I think so the changes I made were to
you got a color coordinated and everything. Look, you go. I don't even know.
I know this is a lot of work when I do this, and it's like this is the 21st of September, but there's been multiple variants that'll have a big shift and save that old one as it was. make a copy and then go through. So the changes since we've been on the call.
Sorry to get you. I know I'm very chatty this morning. I did a double shot coffee, so sorry about that. But I want to emphasize this is the reason. I mean, this kind of stuff, and I knew you were committed to your trading already, Chloe, which is why we posted the the Helping Chloe mini series. This kind of stuff. There's not just the commitment to do the back testing, which is awesome, which is more than what 95% of traders will ever be willing to do. They'll find ways and hacks to try to avoid doing the dirty work. But to the point that it's almost like you bring joy to what others deem the dirty work. Writing out a trading plan, like, to be honest with you, I've never even written out something as comprehensive as this. I've got my own comprehensive trading plan, but never did I color or like color these sheets. I didn't even know that you could do that, right? I've seen flow charts. I've seen all sorts. So there's a lot of different ways that you can create a trading plan. But the formatting of this, the just the beauty, the love that you brought to this, it's like, I can see that you like there's no other option for you rather than to become a full-time trader. Like if you just keep going down the path that you're on, you'll get there, and So anyway, that was my little 2 cents, guys. This is hopefully refreshing for some folks that are thinking I'll just show up and I'll click some buttons and maybe make some money. Like there is no, and if you're in part of Pro Trader, you already know that that's not the case. But if the dudes selling strategies on Instagram, like when you're comparing that to the love and attention that Chloe is bringing to her craft here, like you can see, this is a world-class community. We need more Chloes out there. Like we're willing to do this stuff. And when I say we, I mean Chloe and her color coordinating. I've never even been to that point. But yeah, this is what it's about. Like these other people, these Instagram, trading gurus, they don't stand a chance against somebody like Chloe who's actually here putting in the work. So good stuff. Carry on, Chloe.
Thank you. That's motivational. Thanks.
Yeah, for sure. You deserve it.
So this section I changed after last week. So this had my rules on how to, like, if this then that, set my entry order, and now this whole section is changed as we kind of discussed earlier. To measure it up if the EO is here, and then what I have to do in each situation. So it's kind of set, and then I can put that in my back test. I can put that into other areas as well.
I'll have a little skim of that, and then I'll read it out, see if it makes sense for everybody. So a trading plan, you want to write it in such a way that when you could give it to an employee of yours who's a trader and say, do this exactly, and they'll be able to nail it. It's just a how-to guide. That's all that a trading plan is. So place stop loss, place profit target just below the bodies of resistance level if present. Great. Yep. Just below the bodies or above, depending on which direction that you're trading. Yep. If not, previous swing, make position 1-to-1. Okay. If EO is on daily pivot line, leave on daily pivot line. If EO is in front of daily pivot line with 1 hour 50 MA behind daily pivot line, move EO to daily pivot line. If EO is within 10% and in front of 1 hour 50 MA, then leave it there. Okay, good. If EO is past 10% and in front of 1 hour 50 MA, then move to 10% and decide between trading beyond target or clipping stop loss. Cool. So this is also, that's a really good point right there. I like that one a lot. See how, I'm going to read it again. If entry order is past 10% and in front of 1 hour 50 MA, that part's not that important, then move to 10%. This part here, and decide between trading beyond target or clipping stop loss. She's got in her trading plan, and you've got in your trading plan that, and we'd call that discretion. This is that little tiny 10% of discretion that comes into trading. This is where you can refine and get much better results than just trading 100% purely mechanically. And also what makes us beautifully imperfect with our trading approach is that you've got a choice. And in your trading plan, like a trading plan is not just it is a specific set of rules, but you can write contingencies into the trading plan itself to say, at that point, you got an option. Trade, you can clip the stop loss or trade beyond profit target, just whatever is appropriate. And that's that little bit of human element there, because not everything, unfortunately, trading, we can't always trade mechanically. There are situations that things might be appropriate this way or that. And then if you test that, you can expand upon that variable even further and then see which one. Sometimes this one's better and sometimes that one's better, but this other third variable is the worst. So we're going to have a choice here, and it's situational. It's going back to the example that I used before with the trade management. You know how I said trading behind 1 hour 50 MA, trading behind 5 minute swings, and so on. There's that can be a really good for the middle 50% of the trade. But I actually maybe 2 or 3 years ago now, I came up with something called the bailout method. It's not actually currently in the curriculum, but will be soon. The bailout method is just once you are within 80% of the way to your ultimate profit target, right? I started to find that the 1 hour 50 MA or swinging 5 minute swings, that can start breaking down, and I'll end up costing me more in profit if it were to pull back to the recent 5 minute swing or 1 hour 50 MA. Because you can be 95% of the way to your profit target. And I was religious in sticking to my trading plan. And there was no hard technical thing that would have minimized the downside of it pulling back to, to 80% of my ultimate profit target and stopping me out, or capturing that extra little 5% and getting the full 100%, whatever my profit target is. Let's say it's 3%, pull back to only taking a 2%. My stop loss is around the 2%, but I'm sitting at 2.9% and I'm just going for 3. It's an asymmetrical, or it's a negative reward risk kind of ratio at that point in time. And I was exploring. I was like, okay, what if we go with the 1 minute 50 EMA? What if we go with the, and sometimes if price is just fucking blasted its way down, the 1 minute 50 EMA is not good enough, right? The 30-second EMA sometimes is not good enough, because it all comes down to how quick price got to where it got to, because those EMAs are lagging indicators. If this is just one big monster 10-minute candle that just like shot 95% of the way to my profit target, then it doesn't make sense to trail behind even the 30-second EMA, because that's going to be miles away, right? So, and I had to find a way to reconcile my trading plan that was a smart way to actually do this. And it was just what I called the bailout method, where I've actually got written in my trading plan that when I'm beyond 80%, I'm in short-term aggressive at that point, but if I'm beyond that 90% mark, I have permission for whatever whim, hope, reason, whatever the hell I want. I've got full permission to let loose and just close the trade for whatever reason I deem necessary. Right. And that sounds strange when it comes to like a trading plan. It's like, well, just do whatever the hell you want. It's not a plan. But when I'm in that zone, this is when I can have fun with it. I thought, I'm like, oh yeah, there's a 30-second like bullish candle in my down position here. It's just, 30-second bullish candle. Fair enough. Let's kill it. Let's close it. And no matter what I do there, I've actually written in there that I'm sticking to the trading plan just by making that discretion. Maybe a little, a 2-minute tweezer bottom, something like that. I can kill it, because quite often I found that there's no hard metric or indicator or something that I could work with at that point in time. So sometimes you'll come across these little anomalies where putting it back on the trader, just here you're allowed to use your own discretion, and you can give either a series of options, whatever you just deem necessary at that time, that you can choose from, or it could be like the bailout method, where it's just like, let it rip, man, whatever you think is right. You've already got that, and that's quite fun, and I have fun when I do that, because trading plan all the time, it's always doing the same thing over and over, because that's what works. But it's that time that I can just I can look at RSI, I can look at MACD and be like, oh yeah, there's a little thing that's going on here. I just saw a black cat on the street. That means close position. Yeah, let's close it. Whatever I want. Feeling like on the daytime, you can get a little bit metaphysical with it. And I'm still sticking to trading plan. So putting in those contingencies in here, that's where I really like what you wrote here. I'll just repeat that again, and decide between trading beyond target or clipping stop loss. For anybody who trades pip snatches will probably have an idea of what that means. Yeah, just for whatever reason. That's where you can start layering in things like, well, there's a good support level here, resistance, or RSI, whatever your favorite flavor to add onto it is, and to make that decision. Cool. Sorry, I totally derailed you right there. Maybe I'll stick to only the single shot coffees before these sessions.
That's fine. That's fine. That's all I really want to say. That was the main part I'd changed.
Mm-hmm.
And this bit here is I changed more based on what I feel like it's like over, like it's going to come down when I get through my back testing. It's going to become simpler. But so I have like three sections. So a section for DDP, a section for 1 hour market condition, and then a section for 1 hour pullback quality. And then so this is DDP. So I have one block which is it's invalid if one of these things happened. Then I have like the analysis process, like what how I go through and analyze the DDP, and then how I categorize it between epic positive, what's epic solid, what's positive and what's negative to get there. But the bit that I changed in was here where we sort of spoke about support and resistance. So like just having in as a hard rule, if there's a strong support and resistance level and the previous touch was a rejection, then it's invalid.
It's all in
If
there,
there's a
yeah.
strong daily SR level and it was recently injected, then invalid. So yeah, this has been more which I'd like before last week. I'd been a bit like, well, what if it just because it's there doesn't mean it like it has to pull back somewhere. But now I'm just staying away from there, staying away from that.
Good stuff. Really, really, really good. It's the key thing. And looking at this, I know some traders may get overwhelmed, being like, fuck, do I need to write all this down? By writing it down, you've brought an awareness to this. And now, correct me if I'm wrong, but I guess every time you sit down to take and execute a trade, you don't read this entire manuscript every time, do you? No. It's
No.
just you're making these little micro commitments to yourself to be, okay, invalid if A, B, C, D, E, F, G, whatever you want to put in there. So that's the manual that once you've written it down, again, it's like, to be honest, there's things in there that I have my trading plan that I haven't written down. I just know that I just don't do. And I know like the preference and what I introduced not that long ago about trading beyond those recent highs or recent lows. I prefer to stop clip and move up behind S1 or R1 with the stop loss, just as what you put there. That's not specifically in my trading plan as elegantly as you wrote it. And this is where it kind of comes down to trading personality and trading style, right? And just being comfortable that maybe the way that you or I trade maybe is not the most even profitable way, but it's just the way that you do prefer. Like if it's something holding on to trades longer or exiting them out early because you're like, I don't like doing that. But for me, the one that I really noticed that I didn't like is trading beyond those recent highs and lows. So bloody annoying that it would get so close, get to the 0.9% running profit, and then form a double top and then pull back and take you out for a stop loss. It was just annoying, right? That's the reason why I have this variant. I don't even know if that's a more profitable variant of not trading beyond, stop clipping to offset that risk of trading beyond highs and lows. Maybe it's a more profitable variant, but I just knew for sure that it was darn annoying. So I tweaked it slightly and it works great. Good stuff. I love the attention that you've been bringing into this trading plan. I didn't even know that you had such a beautifully written and structured trading plan here.
Yeah, I use it like like sometimes I'll get something and like a lot of stuff I know, but then sometimes I'm like, oh, what is my rule on that? What do I do? And then I come back and then I sort of come back and check it.
Good.
Or if I
Exactly.
see
And
I felt
even
tired, then I'd be like, oh, my brain's just not working. Let's go and actually look at how am I supposed to analyze this? Am I missing something really obvious because I'm not my best self today or something?
it's your trading companion, eh? You know, it would be really good if we get to the point, maybe we're even at the point, is when you feed this into ChatGPT, your brain's not working, right? You take a snapshot of the trade, plug it in, be like, ChatGPT, does this meet my trading plan? And it's like, well, I can actually see here, Chloe, that you have highlighted, step 1, part 4 here. You've not traded beyond here. And you're like, oh, thanks. All right, well, let's not do that. If I start implementing AI, it'll be one of those like co-pilot kind of situations in my trading. We'll be like, am I doing what you set the rules and parameters, and then that just sits on your shoulder to be like, am I following my rules and parameters? I reckon there's something to that, I reckon. Neil's over here said, and you'll know straight away when you review a bad trade, which rule you've broken without looking at the take profit. Yeah, you can use this and layer this across historical data and trades that you've collected, or trading plan without looking at the TPS and trading plan. Okay, I see. Yeah, exactly. Good stuff. Chloe, any final key takeaways? I think we've wrapped up very well today. We can leave it on a high with your beautiful chair there.
No.
Cool. Good stuff. Right. If you would mind, stop screen sharing there for a moment. Also, thank you everybody for tuning in to another episode of Helping Chloe. Same time, same place next week. And thank you so much, as always, Chloe, for being so open book with your backtesting projects, with your live trade performance, with your trading plan right there. I wonder how many people are going to watch the recording of this and like pause the video, be like, "Oh, that's good. I'm gonna steal your trading plan there. I'm gonna take that. I'm gonna incorporate that in mine." That'd be amazing, I'm sure. Guys, peace and love, and thank you all so much for tuning in live. And I'll see you all next week. And thank you again so much, Chloe, for your ongoing sharing with the community. It's powerful stuff here. Cool.
Great, thank you.
Thanks, guys. Have a great week. Bye for now.